If you're watching this in 2026 and you still don't understand Forex, good, because 90% of what's on YouTube about Forex trading is outdated, overcomplicated, or just wrong. This video fixes that. In the next 20 minutes, I'm taking you from absolute zero to placing your first trade. No fluff, no jargon walls, no, you need a $10,000 account to start nonsense. Just the real practical foundation. Here's exactly what we're covering. What Forex actually is and why it exists. Not the textbook version, the version that actually makes sense. How currency pairs work, because if you don't get this, nothing else clicks. How to read a chart, the skill that separates traders from gamblers. How to place your first trade step by step, and how to not blow your account in the first week, the part most beginner guides conveniently skip. If this is your first time here, I put out trading education every week. No guru nonsense, just real frameworks. Subscribe if that's useful. Let's start. Forex stands for foreign exchange. That's it. It's the market where currencies are traded against each other. If you've ever traveled abroad and exchanged dollars for euros at the airport, you've participated in the Forex market. You just didn't know it. But the Forex market isn't an airport kiosk. It's the largest financial market on the planet. Over $7.5 trillion moves through it every single day. Not billion, trillion. To put that in perspective, the entire US stock market trades about $500 billion per day. Forex trades 15 times that. Why is it so big? Because currencies are the foundation of every international transaction. When Apple sells iPhones in Japan, they need to convert yen back to dollars. When a German company buys oil from Saudi Arabia, euros get exchanged for reals. When governments pay debts to other governments, currencies move. Every import, every export, every international investment, all of it runs through Forex. And here's what makes Forex special for individual traders. It runs 24 hours a day, 5 days a week. It starts Sunday evening when Sydney opens and doesn't stop until Friday evening when New York closes. That means you can trade before work, after work, at 2 a.m. if that's your thing. No waiting for a bell to ring. It's also the most liquid market in the world. Liquidity means there are always buyers and sellers. You'll never be stuck in a trade you can't exit, unlike some stocks where you might own shares nobody wants to buy from you. This is where most beginners get confused, and I'm going to make sure you don't. Currencies are always traded in pairs. You never buy just euros. You buy euros and sell dollars at the same time. That's what EUR/USD means. Euro is the base currency, the one you're buying, and the US dollar is the quote currency, the one you're selling. When you see EUR/USD equals 1.0850, that means 1 euro costs 1.0850 US dollars. If you think the euro will get stronger compared to the dollar, you buy EUR/USD, also called going long. If you think the euro will weaken, you sell EUR/USD, also called going short. There are 3 categories of pairs. Major pairs. These all include the US dollar, EUR/USD, GBP/USD, USD/JPY, USD/CHF. These are the most traded, most liquid, tightest spreads. If you're a beginner, you start here. Period. Minor pairs, also called crosses. These don't include the US dollar, but still feature major currencies. EUR/USD, EUR/GBP, AUD/NZD, GBP/JPY. Decent liquidity, slightly wider spreads. Exotic pairs, a major currency paired with a developing economy's currency. USD/TRY, Turkish lira. USD/ZAR, South African rand. Wide spreads, volatile, unpredictable. As a beginner, stay away from these. I mean it. Come back to exotics after you've been profitable on majors for at least 3 months. The only pair you need right now, EUR/USD. It's the most traded pair in the world. Tightest spreads. Most predictable behavior. Every chart pattern, every strategy, every concept you learn, practice it on EUR/USD first. Open up any trading platform and the first thing you see is a chart. If it looks like hieroglyphics right now, that's fine. In 3 minutes, you'll be able to read it. Most traders use candlestick charts. Each candle represents a time period. It could be 1 minute, 1 hour, 1 day, whatever you set. Each candle tells you 4 things: the opening price, the closing price, the highest price reached, and the lowest price reached during that time period. The thick part of the candle is called the body. If the candle is green or white on some platforms, the price went up during that period. The bottom of the body is the open, the top is the close. If the candle is red or black, the price went down. The top of the body is the open, the bottom is the close. The thin lines sticking out above and below the body are called wicks or shadows. The top wick shows the highest price reached. The bottom wick shows the lowest. A long upper wick means the price tried to go higher, but got pushed back down. A long lower wick means price tried to go lower, but got pushed back up. 3 patterns to recognize immediately. Doji, tiny body, long wicks both ways. This means indecision. Buyers and sellers are fighting and nobody won. Hammer, small body at the top, long lower wick. This often signals a reversal from down to up. Engulfing, a big candle that completely swallows the previous candle. Bullish engulfing, green swallowing red, equals potential move up. Bearish engulfing, red swallowing green, equals potential move down. That's enough chart reading for day 1. You don't need 47 patterns memorized. You need these 3 and the ability to read the basic story each candle tells. Where did price open? Where did it close? And how hard did buyers and sellers fight in between? Let's place your first trade. I'm going to use HankoX's ActTrader platform because it's clean, beginner-friendly, and has everything you need without the overwhelming complexity of some platforms. If you want to follow along, you can open a free demo account. Link in the description. 0 risk, virtual money, real market data. Step 1. Select your pair. Click EURUSD from the watch list. The chart loads. You see current price, bid, and ask. Step 2. Decide your direction. If you think EURUSD will go up, you click buy. If you think it will go down, you click sell. For this example, let's say we see a bullish engulfing candle on the 1-hour chart and we decide to buy. Step 3. Set your position size. This is the most important decision. On a $500 demo account, we're going to use 0.01 lots. That's a micro lot. Each pip, the smallest price movement, is worth about 10 cents. Why so small? Because we're learning, not gambling. More on this in a minute. Step 4. Set your stop loss. This is the price where your trade automatically closes if it goes against you. We set it 30 pips below our entry. At 0.01 lots, that's a maximum loss of $3. $3. That's our risk on this trade. Step 5. Set your take profit. This is where the trade closes automatically if it goes in our favor. We set it 60 pips above entry. That gives us a 1-to-2 risk to reward ratio, risk $3 to potentially make $6. Step 6. Click the button. Trade is open. Now here's the hardest part for every beginner. Walk away. The trade has a stop loss and a take profit. It doesn't need you staring at it. Go live your life. The platform manages the rest. This is the section that saves your money. Pay attention. Rule 1, the 2% rule. Never risk more than 2% of your account on a single trade. On a $500 account, that's $10 maximum. On a $100 account, that's $2. This sounds painfully small, and that's the point. The 2% rule means you can lose 50 trades in a row and still have half your account. It's not about getting rich on one trade, it's about surviving long enough to learn. Rule 2, always use a stop loss. Every trade, no exceptions. A trade without a stop loss is not a trade. It's a bet. The market will eventually move against you by more than you can afford if there's no automatic exit. This isn't optional. Rule 3, 1 pair, 1 time frame, 1 strategy. Beginners who trade 6 pairs on 4 time frames with 3 different strategies learn nothing. You can't isolate what's working and what isn't. Pick EURUSD. Pick the 1-hour chart. Pick one simple strategy, like trading engulfing candles at key levels. Stick with it for 30 trades minimum before changing anything. Rule 4, demo first. Trade on a demo account for at least 2 weeks before going live. I know it feels like wasting time, but here's the truth. Every mistake you make on demo is a mistake that didn't cost real money. Learn to lose on virtual money first. Rule 5, journal everything. Write down every trade. Why you entered, what happened, how you felt, what you'd do differently. After 20 trades, patterns emerge. You'll see your own tendencies, over trading, revenge trading, FOMO entries. The journal makes the invisible visible. It's the single most underrated tool in trading. Before you go live, your broker choice matters more than you think. Here's what to check. Regulation. Is the broker regulated by a recognized authority? This means your funds are protected, accounts are audited, and there's a complaint process if something goes wrong. Non-negotiable. Minimum lot size. Must offer 0.01 lots. If the minimum is 0.10, you can't manage risk on a small account. Walk away. Spreads. Look for 0 or near 0 spreads on major pairs. Every pip of spread is a tax on every trade you make. Withdrawal speed. How fast can you get your money out? Same day is the gold standard. If a broker makes it hard to withdraw, that tells you everything about their priorities. Minimum deposit. You want a broker that lets you start small. $50 or less. You shouldn't have to deposit your savings to learn. HankoX checks every box. Regulated 0.01 microlots, 0 spreads on majors, same day withdrawals, $50 minimum deposit. That's why I recommend it for beginners specifically. It's built for people who are learning and growing, not just large account whales. That's your foundation. You now understand what Forex is, how pairs work, how to read a chart, how to place a trade, and the rules that keep you alive long enough to actually become profitable. Here's what I want you to do this week. Open a HankoX demo account, link in the description. It takes 2 minutes. Load EURUSD on the 1-hour chart. Practice identifying bullish and bearish candles. Place 5 demo trades using the exact framework we covered. 0.01 lots, stop loss, take profit, 1 to 2 risk reward. Journal each one. That's it, 5 trades. If you can do that with discipline, no FOMO, no random entries, no skipping the stop loss, you're already ahead of 90% of beginners who jump in with no plan and blow their account in a week. Next week, I'm releasing a video on how to choose a broker that won't scam you. The red flags and green flags nobody talks about. Subscribe so you don't miss it. And if this video helped you understand something that confused you before, drop a comment telling me which part clicked. It helps me make better content for you. Demo account link, free resources, and the journal template are all in the description. Your trading journey starts with one trade. Make it a good one.